Holy cow, it's happening. Round two. We are talking with Mark Kohler, my tax attorney. All right. That's a big deal. It's big, and that's very important. He's not just a CPA. He's not just an attorney. He's freaking both. This guy knows what he's doing. And we are talking today about COVID relief round two. Let me tell you something. If you got paid the first time, wait till you see what's going to happen the second go around. You're not even going to believe what we're going to talk about today. Mark, I want you to tell us exactly what you're going to share with us today as I share this to our Facebook group. For those of you that are not already in the Facebook group, I want you to jump in our Facebook group because that's where we're going to be doing the answering of the questions live with Mark. But you need to know there's some money out there that's coming down the pike. You need to know how to get it. How do I get it tax-free? And then we're going to talk about a tax tip deduction that you're going to be able to take that's going to save you huge. So Mark, take it away.
Well, thank you, Michael, for having me. How's my Club Wealth Nation?
Good Loving it, man. Oh my gosh. These guys have had their best years ever in 2020, despite COVID. Can I just tell you?
Wow. Well, that could be good or that could be bad based on what I'm going to talk about. So the COVID relief number 2 passed, as many of you know, in the last week or two. And Donald Trump played around with it and then ultimately signed it. 5,500 pages long. My team and I continue to read it at night, trying to figure out any additional loopholes we can share with our clients and family and friends and you. So Michael, of course, as soon as that bill passed, said, dude, we got to have you out here to the nation and let's break it down. So let me tell you a few of the things we're going to cover. First, for those of you that got PPP, how it's forgiven. Number 2, how you can get more money with the second round of PPP, and if you qualify, and how you do it. Third, we're going to talk about the employee retention tax credit, which is a unique little dealio. And I'm going to then share with you, and I'm not going to tell you what it is now, because it's the highlight of the show is the coolest tax write-off that I never thought would pass, that was included in this legislation that we have for the next 2 years. And I guarantee all of you, it could save you at least $5,000 to $10,000 in the next 2 years. I can say that confidently. Now, you might find out about it somewhere else. Your accountant may bring it up or figure it out, but you are the captain of your own ship. And the more you know about your tax planning and your tax return in your business, the more you're going to save. So I'm glad you're hearing it first here, and you can use it to be more successful. So that's our topics today. We may go 30 minutes, may go a little longer, a little less, but it's live Q&A as well. And I want to be able to pick up everybody's questions as quickly as I can as we go through this. Michael, how's that sound?
It's sounding good. And I'll tell you right now, I'm actually tagging some people in the Facebook group to make sure that we've got as many of our important peeps as possible tagged in here so I can make sure you guys see this. Do me a favor, those of you that are watching right now, help me out. Get some people tagged in here that you know need to hear this. If you're a Club Wealth coach or client, tag other coaches and clients in this, especially. We want to make sure that everybody hears this and can get this implemented in time to get the freaking money. Very, very important. So that said, Mark, I'm super excited. Hey, one of the things, I've got a question that I want to just maybe throw at you, and you may want to answer this now or later, I don't know. But, you know, there's been some rumors. Some people have said, well, are they going to make it tied to the vaccine? Am I going to have to get the vaccine to get the money? You could choose to answer that now or later, but that's one question that we've heard from several people. But go ahead.
It's not in the legislation. I don't even know if President Biden can do that with executive order. I think that's just social media craze talking about vaccine rumors and conspiracy theories. It is. So I'll tell you this, there's nothing like that in this 5,500 page legislation. And I've lost sleep over it too. So you're good. No, I wouldn't worry about vaccinations and that.
Love it. All right. That's good to know. Okay. Keep going.
All right. For all of you, this is topic number 1. For all of you that received, and by the way, we'll field questions. I just typed in the chat and said, testing, can you see this? Question mark. So if someone gives me some love in the chat, I'm going to try to look at the questions myself and repeat them for everybody as needed, but I'm not seeing anything.
You're not going to see the questions in the chat. You're going to see them on Facebook. You're going to see, so I'm in the Facebook group right now. in the Facebook group. So for those of you that are watching elsewhere on Facebook, jump into, and I do see we've got a bunch of comments on the live feed. Katie Hallard is watching, Grayson Benefield, Daniel Bowers, Carol, Michelle. Oh my gosh, I got a bunch of people jumping in there. So I'll have to
want to
watch
cut and paste them in?
What's that?
Can you just grab those comments and paste them into Zoom chat?
As often as I can, as quick as I can, I will do that. Yes.
Okay, thank you. We'll do that.
Yep.
All right. Okay, so first topic today is PPP forgiveness round one. Now, I know many of you received some money during 2020 from the PPP program. IRS all year long said, oh, that's great. We won't tax the money you receive, but any money you used for business deductions, you don't get a write-off for those. So in effect, you got taxed on the money, which was not Congress's intention. So in this new bill, Congress said adamantly, no, no, no. IRS, you are not going to tax this. So the forgiveness is gotten simplified and it is complete. All you have to do is make sure you fill out the application and your PPP money you received in 2020 is completely tax-free. And the money that you spend it on, the expenses you spend it on, you still get to write off. So this is better than college when you got that free grant the first week of college and you blew it recklessly like all of us did. Now you've got money for your business that hopefully you use wisely, forgiveness. Now, Matt and I in our newsletter have articles that we're publishing on a regular basis on this. We'll get into details in some of those articles on the details. If some of you are, and you can do a consult with any of my tax lawyers and just do a 30-minute consult and apply it to your situation. But let me give you a few general answers here and we'll do some Q&A. First, if your loan was under 150,000, the application is one page. And Congress said, we don't even want calculations on that page. It was like your test in 5th grade you were praying for. So there's no calculations. All you put in is how much money you got, verify that you spent it according to the rules, and you get forgiven. It's one page. You will submit it, not to the SBA, not to the IRS. You will submit that one-page application to the bank where you got the PPP money. Now, the SBA was charged. Yeah, SBA was charged with getting out the new application within 10 days. We haven't seen it yet. It may be out. I haven't seen it. I've been buried for the last 2 days, so it could be out today. But the point is, your bank is going to probably have an online portal or have you stop in at the branch, wherever you got your money, and you'll fill out that one-page application. Do not lie. Do not cheat. You still had to spend 60% of the money on payroll, and you had to follow the rules of what you spent the money on. Because if you get audited just randomly and you lied on that, it's ugly. So be careful. But that's the PPP forgiveness. That's first topic. Any thoughts, comments, questions on the chat?
No, I'm trying to follow it all as I'm tagging people in here, but so far, no, we're good. We got a bunch of people that are tagging people in here, and thank you for that, you guys. Keep tagging the people that you know need to see this. And do type your questions in, especially if you guys that are watching, if you could jump into the Club Wealth Real Estate Agent Mastermind group and put your comments in there, that'll make it easier for me to bring your questions over to Mark. So again, go to Facebook.groups/Club Wealth. And if you're in the Facebook group already, you know how to get there. But anyway, keep going. This is fantastic. First and foremost, I'm really excited to hear, because this is one of the big things we were waiting for is, were we going to have to do the 40-page application for this freaking forgiveness? And it sounds like now we're down to a one-page application. So that's going to be great.
Yep. No supporting documents submitted with it. It's clean. If your loan was over 150,000, there's a longer application, but still not terrible. And you'd probably want to consult with your tax attorney or CPA, our office, maybe to help you with the application. But, and by the way, I'll say that now too, if any of you need a consult, this is not an infomercial. Michael knows we're very cautious of that. We're not out here there's no upsell today. I come on as a contributor to your group and just appreciate your business. And if there's ever a problem, we're never going to hit 100% out of the park every time there's a consultation or a tax return or bookkeeping or something. Let me know. Personally, you can get a hold of me through my email, mark@markjkohler.com. Michael sometimes says, hey, someone said something, and I'm going to take care of that. I never want someone to feel like I had a bad experience and Mark didn't care. I do care. But if you want to consult, our phone number is 888-801-0010. So if you have questions on the PPP and any of these issues, schedule a half hour, an hour. We're out about a week and a half or two for a consult. Get it scheduled. You can always cancel if you figure it out before then. All right, now round two. Worth a lot of money. It is first come, first serve, but they've allocated enough that none of us are concerned that the money's going to run out. Number two, you will apply in the same way. You're going to go to your bank, probably the bank you applied for the first round of money. Large companies are not allowed to get money here. The maximum is $2 million. And if you have more than 300 employees, you can't play either. So they're really trying to get this down to the small business owners. Now, you may say 200 employees is not small. Well, in the big scheme of things, it's small. But all of you, now let me answer some of the questions that typically come across. You do not have to be an S Corp. You do not have to have W-2 payroll from your S Corp. You can be a sole proprietor or an LLC. Now, it does make it easier. And there's some strategy that we could talk for the new year. For those of you that do, all of my realtors making more than 50 grand. And if you're with Club Wealth, you're making more than 50 grand. Mm-hmm. You got to make sure that you're an S corporation taking payroll. That's going to make your application easier, but you can still do this if you're just a plain old sole proprietor or an LLC. Mm-hmm. Now here's the catch. To get money in the second round, you have to show that you had a 25% reduction in sales at least one quarter last year in 2020 compared to 2019.
Wow, that's significant.
Yeah, now let me explain why.
Before you move on from this, I want to make sure you guys know if you didn't have that happen, don't hang up yet. Don't go away, because we got a bunch of other stuff for you that's where you can get money and where you can also save some money. But that being said, so if I had my best year ever last year, and all of my quarters last year were solid, and I didn't have any quarter last year that I did less than 25%, that I had a 25% reduction in my gross revenue from the year before during that same quarter, I don't qualify.
That's right. But Michael, I knew a lot of realtors in second quarter that did not have a great second quarter because everything was shut down. Title companies weren't even doing closings. It was crazy. In April, May, and June, it was pretty precarious. But I had a lot of realtors July through the end of the year that picked it up, and they had a kick-ass year. So, so let's go through the math here on what this means. Now, let me repeat. The first round of PPP, all you had to do was verify that you had uncertainty. Mm-hmm. We all had uncertainty. You're in. Yep. But this time they're saying, hey, for some of you that had a kick butt year in 2020, you can't dip in the bucket a second time. So the actual math, and Michael, I'm very impressed. You said it properly, but I'm going to diagram it. Mm-hmm. So what you want to do is look at your 2020 and 2019. Now, I know you realtors. I know you. I can peer into your soul. Very few of you even have QuickBooks going. Your books are a mess. You're going to have to go to your bank statements and look at your deposits maybe. But what we're worried about is gross revenue, not your expenses, not what you took home, not your net income. And we're not even looking at your 1099 from the broker. We're looking at what you made in each quarter. So that's January, February, March, April, May, June, July, August, September, and then October, November, December. So 1, 2, 3, fourth quarter. Now, let's say, 2020 is the crappy COVID year, right? 2019. All you have to do is compare one quarter to the next and show a 25% reduction. So if in one quarter, let's say most of the year, you brought in 100 grand every quarter, but in quarter two, you only brought in 75 grand. All right. So you have to compare that to quarter number two in 2019. The previous year. Yeah. And so I'm going to compare quarter two to quarter two. Now look at, if I'm averaging 100 grand a quarter, which is about 33 grand a month, right? In gross sales, gross commissions, you may say, well, Mark, I still had a great year, but you're looking at the total. I want you to hyper focus on quarter two. So we're going to look right here and go, oh, I only had 75 grand in gross revenue in second quarter compared to second quarter 2019. That's a 25% reduction, you're in the money. You got it.
Yeah.
You're going to go apply for PPP in the same way. If you're a solo owner, you're going to get around 20 grand. If you're a realtor just doing a sole prop, you're doing an S corp, you're going to get around 20 grand.
Wait. Hold on. So what, are you saying that if I had a $25,000 loss in that one quarter that I could get as much as $20,000? Did I hear that right? Or am it?
Yes. And that wasn't a loss. You just had a dip in revenue.
I had a dip in revenue in one quarter. That is insane. And Katie Hallader is saying, wait a minute. So you only need it. Thank you for the question, Coach Katie. She's saying you only need it for one quarter. You just have to have one quarter where you dipped by 25%.
You got it.
And so the rest of my year, I could have had the best year ever, and I could still go back to that quarter, and I could get as much as almost the entire amount.
Yep.
That is insane.
Yes. And Congress has already said, IRS, don't even think about it. It is completely forgivable, completely tax-free. You're getting a check for, now this is the bit, now some of you may be getting a stimulus check for $600. Maybe you already got it. For you, your spouse, or your kids, depends on your income bracket. But this is what's for business owners. This is your stimulus. And you could, if you're the only employee and you made about 100 grand last year in 2020,
yeah,
you're going to get about 18 to 20 grand. Now, if you had other employees in your brokerage, then remember, this is the Paycheck Protection Program. So how do you determine your amount? Should I go there?
Well, before you do, so yeah, well, and I think this is going to be right along those lines. And Coach Katie asks, I love your questions, Coach Katie. Thank you for this. This is great. These are great questions. She's typing in the chat. And by the way, guys, ask your questions in the chat. This is great stuff in the Facebook feed here. Katie asks, what happens? Does the equation change if you have more than one quarter where you were down by 25% or more?
Nope. You just have to show one quarter to get it. That's your ticket to the party.
Okay, so the ticket to the party is I have to have had one quarter that was down by 25% this year versus last year.
In the same quarter.
Then I qualify. So now let's do the math. So now that we know I qualify, how much do I get?
Okay, now it's even better. Believe it or not. Once you're through the door, okay, the test is, I'm going to use blue now. You get to pick any 12 months in the last 2 years. So I could choose this period. I could choose this period. I could choose that period. See what I mean? I got to pick 12 months. Any 12 in a consecutive, any 12 months consecutively, oh my gosh, whatever, in a row. I'm at pressure in my brain here. I can't spell consecutively. Anyway, 12 months in a row in 2019 or 2012, 2019 or 2020, 12 months, consecutive months. So you could go from February of 19 to February of 2020, but that's 12 months in a row. Okay. Now forget the quarter thing. Because you want to, once you're in the party, the quarter comparison is over. Now you're doing your math on the PPP dollar amount. So you choose 12 months and you total up your payroll. Now, if you're a solo owner, the max you could take is the maximum amount is 100 grand. It caps out at 100 grand. But if you only made 80 grand last year, or you want to find the biggest 12 months, you're trying to find your worst month here to get in the party. Then you want to find your best 12 months to get the PPP money.
What?
Isn't that interesting?
Gosh, this is so crazy.
So find your best 12 months, then you divide it by 12 and multiply it by 2.5.
No freaking way.
That's
Okay, hold on. I'm writing this down. Best 12 months.
Okay. So that's why I say if you had a good year.
Hold on, I multiply by 0.2 or by 2.5?
2.5. So I'll take 100 grand.
Gosh, no way.
Divided by 12 is $8,333 times 2.5. 20,833. So the most you're going to get for you, if you're the only owner of your business, 8,333. That's your PPP money, free money. Don't have to pay it back on anything, not taxed on it. Now, if you're a brokerage like Michael or an organization and you've got 5 or 6 employees, And your payroll over 12 months was like, let's say your payroll's 40,000 a month, by the time you pay all your peeps. So you take 40,000 a month times 12, that's your average payroll, that's 480 grand, divided by 12 times 2.5. You just got 100 grand. That's how much you get free money. Free. Got a grand.
And it's okay. This is crazy, you guys.
Yeah.
I hope everybody's taking good notes on this. And by the way, there's more to come. I want you guys to know this is just one thing, right? So, and Mark's got 2 more ways that you guys are going to be able to grab some serious cash here.
Oh yeah. Okay, I'm going to do the math. I'm going to write this up, everybody. Here, I'm going to do black so everybody can see it here. The blue's a little hard. Here's the equation I want everybody to write down. It's not that hard. And you can do the math at your home. Okay, so you're going to take total payroll over 12 months, or you're going to take your total profit if you're a solo owner, if solo, not to exceed 100 grand. So the max you could claim of profit is 100 grand. So you take this, not to exceed 100 grand, and whatever that total profit is, total payroll, whatever that number is, or whatever this number is, then you divide it by 12 months. So now you come up with your average payroll or profit if you're solo. And that's your average payroll profit if solo per month. And then you multiply it by 2.5, and that's your PPP. Now, to help the restaurant industry, you might want to tell your brother, sister, mom, or best friend, if you're a restaurant, you get 3.5 because they're trying to help out restaurants. And we're going to come back to that later, everybody. So it's 3.5. Now you have 24 weeks to spend the money. You got to spend at least 60% of it on payroll, which you will. This is really only 2.5 months of payroll, but you've got 24 weeks to spend it. So you're going to have, so if we do the math on that, that's 6 months, but you're going to be able to do it in 2.5 months. So you're going to have about 4 months where you're like, what do I do? They gave me payroll to pay myself or my people for 2.5 months, but I got 3.5 more months. What do I do? We're going to come to that. There's another program.
Okay, so real quick, hey, Tara, I know Tara's watching right now. Tara, jump into the group and go into the Facebook feed in the group and ask those questions there, please, if you would. One question Tara is asking right now is this for W-2 employees only, or do 1099 count?
No 1099s.
Okay.
1099s are not employees.
Good. All right.
A lot of people got in trouble with that because they'd add up their total payroll and they say, well, I have subcontractors. Doesn't count.
Yep.
And this is where I know some of you are like, well, I hate payroll. I don't want to pay my people. I just pay them under the table or subs. Well, this is where it comes back to bite in the butt. Plus states are cracking down on that. So be careful. All right. So that's PPP second round.
Okay.
That's option 2. Any other questions on that maybe that I want to field on that?
So
topic?
This one's huge. Now, by the way, guys, don't go away. Remember, we got 2 more big money makers for you coming up right now. From Mark, one of them's a tax deduction that it just opened up that you guys have to take advantage of. The other one is more free freaking money from the stimulus package. So, yeah, I think that's the questions that we have for now on the PPP. That's incredible. So just to synopsize on the PPP round 2, essentially you go back to last year, 2020, and you look at what quarter did I have last year that was 25% worse than that same quarter the previous year. So in 2018, and as long as I have one quarter last year that was 25% down in revenue from the previous year, I qualify for this second round of PPP. Then I can take my best 12-month period, and how far back can I go with that? Anytime, as far back as I want?
2019 and 2020.
So basically I look at my best 12 months my best consecutive 12-month period between 2019 and 2020. I take that period, I add that money up. I'm going to divide by 12, and I'm going to then multiply by 2.5. And that's how much money I'm going to get. And it's a lot. It's mind blowing how much freaking money this is. Now, Coach Katie, another great question. Thank you, Coach Katie. When does this become available, Mark? When can we actually get our hands on the money?
This next week. As soon as the
Right
banks
on. So it's
the
there
banks
now.
are charged. Yeah, the banks are charged with getting an application out right away. What I would do is any of you that got PPP money, and I know I helped Michael with his, I know his bank. So Michael's just got to call up his banker, maybe after this call, and just go, hey, is my app ready yet? Can I fill out my application? And you're going to verify the quarter comparison. You're in the party, and then you're going to fill out the little table, which I just described the math here. It's in the instructions. It's only a 2-page form. It's not bad. And then you're going to freaking figure out how much money you get.
Dude,
most people are getting money within 2 weeks after the bank gets it.
this is
That's
awesome.
what happened last time. Okay.
And by the way, can I just say, I hear this from agents all the time. They love it when I bring you on because we're always freaking saving them money, right? And they love that they come on here and they're paying. By the way, for some of you, this just paid for your coaching with Club Wealth for the next year. Like, this is crazy, you guys.
Crazy.
All right. So what's the next piece? So this
Okay.
one's available right now. So next
Okay,
piece is
now-
what?
Well, you should be able to get money by the end of January if things, that's what Congress is hoping. They want to get this money out as soon as possible. So I'd call your bank and see if you can fill out your application. Now, here's where it gets a little, okay, you ready, everybody? Okay, put your thinking caps back on. This is my thinking cap. It's snowing outside, so I went with the beanie today. I hope you guys are okay with that. It does not reflect on my skills. Okay, the deadline to apply is March 31st.
Oh, so we got to get rolling on this. Don't be waiting around.
Okay. Then you have, that's point number one. Then you have 24 weeks from the day you get the money to spend it. So if you don't get money till February 1st, then you've got until July 1st to spend it. That's your 6-month window, 24 weeks. So the 24 weeks or 6 months starts the day you get your money, not when you apply, not now, not when they pass the law. It starts when you get your money. So you've got this 6 months to spend the money. Now think about it. You got 2.5 months worth of money. So if I got the money in February and I'm going to use it all for payroll, that would be the smart thing to do. Just use it for payroll. That's what it was for. You can use it for rent and utilities. But the theory is you're going to try to use it for payroll. 60% at least for payroll. So you're going to pay yourself. If that's who you're the only employee, that's cool. You got 20 grand, pay yourself. Okay. 2.5 months means I'm going to run out of my PPP money about mid-May. There's my 2.5 months are up. Okay. And that's if I used all the money for payroll. Well, that gives you another 3.5 months of window. And now you can go get a second program, which is called the Employee Retention Tax Credit. Now, Michael remembers back in April, when we were talking about this, we had to choose. On the road, we had to say, are we going to do PPP or are we going to do ERTC? You had to choose one or the other. There was this fork in the road. And most business owners went with PPP.
Because it was more money.
It was more money.
Yeah.
The tax credit was $5,000 per employee per quarter. So if you kept an employee on the payroll and it was essentially 50% of up to 10 grand of payroll. So depending on how much you paid the employee, you could get up to 5 grand per quarter. That's cool. Mm-hmm. Okay. Now, under the new legislation, you can do both.
That's awesome.
So now here's the rule. If I'm going to go for this tax credit, I can't use I can't qualify for the tax credit with money I used from the PPP. So for example, if I'm going to pay payroll for these 2.5 months with PPP money, I can't submit that money to get the credit because I use PPP money to pay payroll. So they're like, use your PPP money. That's it. But once that money runs out, which we know is going to be about 2.5 months or faster, then you're going to say, okay, with the remaining payroll that I have in first quarter and second quarter, you can go out and say, I want this tax credit. it's 70% of your employee wages per employee for the quarter, up to 10 grand of wages. What that means, I know that sounds crazy for accountants. It means you can get up to 7 grand per employee. I had a client last year that had about 60 employees. They weren't allowed to go to PPP because their parent franchise company said, we don't want the bad publicity. Because you saw a lot of companies that they got under heat for taking PPP. But they said, you can go get the ERTC. He got over 500 grand in ERTC tax credits.
Wow.
Last year. So what you can do is say, well, if I'm the only employee, what we're seeing in the legislation, now you're going to want to confirm this with future articles of ours, but what we're seeing is you as the owner employee are allowed this tax credit as well, which you weren't before. And you can pay yourself 10 grand in these last 2.5 months, and the government's going to give you 7 grand back free. Now, if you had payroll, like we were doing an example of 480 grand in payroll, and you had 7 employees, you could take 7 times 7, which is 49 grand, times 7 grand times 7 employees per quarter. That's 50 grand a quarter in free money.
That's huge.
Yeah. Now it depends on how much
questions are piling in now. Oh my gosh. Go ahead. Keep going. You want me to hit with some of these?
Now let me tell everybody.
Okay.
Don't worry about this tax credit first. Worry about PPP first. Go get your application. Focus on that. Okay. ERTC is an afterthought. That's what gets us to second base. So first base is PPP. Second base, we're going to turn the corner and go to ERTC. Now, Michael, you'll love this. Matt Sorensen and I have been researching the crap out of this. There's a couple law firms that have broken down the statute even further, and they're saying you could go back to 2020 and get the ERTC for third and fourth quarter. So not only can I get the 7 grand in first quarter and second quarter of 2020, I can go back and get it for the last quarter if I didn't use PPP money to pay payroll.
During those 2 quarters. So if you use that PPP money in quarters in Q1 and Q2 last year, then you could still potentially, if you exhausted your PPP money in the first 2 quarters of 2019, then you could potentially go get this ERTC money for the quarters 3 and 4 2019. I'm sorry, 2020. That's ridiculous. I mean, holy cow, talk about lots of money on the table. This is better than the first round. All right, so now, hold on. I got some questions for you here. And thank you guys for typing your questions in. I got Barbara Irwin, Katie Hallard, Virginia Corbett. Everybody's asking questions. And this is great. Keep them coming. It's easiest if you put them in the Facebook group versus my personal feed here, guys, but I'll do it in both spots. So the first question Coach Katie asked, and this is a great one. What's the requirement on where you can spend it? Is it the same thing, like 60% toward payroll?
Oh my gosh, Katie, I'm so glad you asked.
Mm-hmm.
And I may be, gotta check my cheat sheet. Yeah, okay. You have to show for ERTC a 20% reduction in any quarter last year. So if we go back, now all of you have been here, unless you've joined us late, you got to go back and watch. But we looked at, here's our quarters from last year. So here's our, I know this looks ugly, but hang tight. Here's our 1, 2, 3, 4 quarters of this coming year. Here's our 1, 2, 3, 4 quarters of last year. You compare any quarter, you want to choose your crappiest quarter for 2020 and compare it to your best, the same quarter in 2019, which you hope is going to be pretty good. Find the quarters that match up. If you have a 25% reduction in sales, you can do PPP. If you have a 20% reduction in sales, so it's a lower bar. Mm-hmm. If you have a 20% reduction in sales, you can do the ERTC. Yeah. So you can do the tax credit, Katie. And so if you're over 25%, ERTC is automatic. Right. But for some of you, you're like, damn, I only had a 22% reduction in sales. You can still get ERTC.
That's 22%. Huge.
Okay, great question.
So back to the question on what we can spend it on, whether it's
anything,
PPP and ERTC.
Okay, I'm sorry. I thought the question was about ERTC. With PPP, you've got to spend at least 60% of it on payroll, and the other qualified expenses are essentially rent and utilities and some interest on fixed loans.
Okay.
Oh my gosh. I've got a fifth one for you today.
Okay.
I love it. Well, we're going to do 4 tips today, and I got number 5 for you. We just found this one out yesterday. Okay.
Dude, we're just getting warmed up here.
Yeah,
I love it.
ERTC. Now, the ERTC you can use on any money you want.
On
anything.
You want. That's freaking huge. Okay. And Virginia asked, so if you're an S Corp and you pay yourself, you can count that too, correct?
Okay, so this is where your S Corp payroll comes into play. So for all of you that know, you're going to take your S Corp and whatever your W-2 was, that's your annual wages. That's what you divide by 12 and multiply by 2.5. Mm-hmm. Now, if you say, well, Mark, I pushed down my wages because I didn't want to pay FICA, then live with it. Because look what happens. If you take more W-2 and you amend your W-2, it could cost you $5,000 or $10,000. Yeah. And then by the time you get your PPP, you actually lose money. So whatever your W-2 is, divide it by 12, multiply it by 2.5. There you go.
Yep.
That's cool.
Okay. Now, and by the way, just to clarify, these are credits. These are not a loan. These are complete credits now.
What? Yeah, it's called the Paycheck Protection Program, which was classified as a loan, but it's completely forgivable. Now, okay. The reason why I say that is because if you don't spend it on the right things,
then it's going to be a loan.
It's going to be a loan.
Yep. Which, and frankly, one of last year, the idle was that was money that a lot of people gave back.
Yeah.
Because for whatever reason. That being said, let's back up to the questions online here. So I've got that's a credit, not a loan. Oh, Barbara asks, do you have a St. George, Utah location that I can meet with somebody? You're not in St. George, but you do have a Salt Lake location, don't you?
No, we actually don't. And no office in Salt Lake, but we have a St. George location and a Cedar City. Yeah, and Cedar City. Okay. Phoenix and Irvine, California, and little old Rexburg, Idaho.
I love it. All right. Good stuff. So keep it going. This is good. This is really good stuff. And by the way, I want to thank and I see Brandon, you're watching. Thank you very much for that comment in the feed, Brandon. I appreciate that. And yes, we love bringing Mark back. He does.
Okay. Now on the ERTC, everybody, don't blow a gasket. You don't need to stress about that today. If there's anything I want all of you to do, I've got better news too. If there's anything I want all of you to do, it's to contact your bank, do your analysis on your quarters, and let's get that PPP round 2 coming your way. Okay. Also, be looking for the forgiveness application from the bank to get your first round forgiven.
That's really important. I'm glad you brought that up because you guys, we cannot forget to fill out the forgiveness application, which is a short form for most people. It's going to be a 1-pager for most people, but it's going to be if you took $150,000 or more, it's going to be a little bit longer, but it's still not bad, right?
Yep. Yep. And here's what's cool, Michael. You ready?
You got to pay it back.
Okay. Now, everybody, quit texting, quit multitasking on your email. Listen to this. Mike, I forgot to say this. If some of you did not get money in the first PPP, you do not have to do the 25% test. All you have to say is all I have to do is say I have uncertainty, and you're backdoored in to the second round, and you don't have to prove the 25%.
No way. That's freaking huge. Okay, I didn't realize that. That's a really big. That right there is a big deal because I know there's people that are watching right now that are saying, but I didn't have a bad month. Okay, well, if you didn't take PPP the first time, then don't worry about it. You don't have to have that qualifying factor. You're gonna qualify. They shoehorn you in
under the uncertainty, blah, blah, blah. Right.
Unbelievable. And believe me, everything's uncertain. There's nothing certain except for death.
On the ERTC, just stay tuned with our firm. We'll be publicizing some newsletters on how to get the ERTC. Can you go back quarters to last year? Where do you get the money? It's not done through the bank. It's done through your 941 application or 941 report every quarter with your payroll. For those of you that are S Corps, it's going to be a lot easier to get or simpler. So anyway, pay it. That's why if any of you haven't signed up for our newsletter, and please open it every week. I'm going home tonight to make sure this week's is out. And you just go to kkoslawyers.com, kkoslawyers.com, and you get 2 free ebooks. You get my free ebook on top 10 mistakes entrepreneurs make on taxes, and Matt Sorensen's book on self-directing. So just go there and sign up for the newsletter. Tonight's newsletter is going out, has an article on the new 1099 rules, because there's now what's called a 1099 NEC. And you've got to either mail them by a certain date or file electronically by a certain date. So that alone is a whole other topic that you as realtors, you want to make sure you're getting W-9s from everybody that you pay over $600, and you've got to issue 1099s. I had a realtor that never issued any 1099s. And 1 year she had like probably 15 people she owed 1099s to. She's like, they never come after me. Didn't file her 1099s. A year later, she was audited with $17,000 in penalties. Wow. Because the penalties are almost $100 per day for not doing 1099s.
Wow.
So you've got to stay on that. We have a 1099 service at my firm. There's a link on our newsletter tonight when it goes out. So
well, let me do this really quick, Mark, to make it easy for everybody. I've put the link in the feed here. It's clubwealth.com/CPA. That takes you right to Mark Kohler. So clubwealth.com/CPA. And Mark is actually a tax attorney, if you missed that earlier. So dude is not just a CPA. He's also a full-blown attorney. You guys, you need to be hearing this. We got a couple more tips coming up for you that are going to save money. Before we do, Mark, we've got questions on this one from Andrew. I think it's Libert. I'm sorry, I'm butchering your last name, but Andrew's got a question. He says, Mark, we're hometown homies. A couple of questions. Can you do both PPP and ERTC? And the answer to that is, of course, yes. And then is ERTC for 2020 and 2021?
No, the ERTC is only for the first 2 quarters of 2020. And we're understanding you can go back and get some of it for 2019 as well. I don't have the application procedure or the math or rules. Again, this was a huge piece of legislation. So I appreciate everybody's patience.
And Andrew is saying that he's got his S Corp set up through your company. So Andrew, that's great news, because that means it was done properly. So now you'll be able to get a ton of freaking money. So, or as long as you qualify, you should get a ton of money. So good stuff. Okay, keep going, Mark.
Okay.
This is awesome. I'm excited. I'm feeling like a lot of people are going to get a lot of money out of this.
Oh, yeah, it's good. I'm trying to figure out what to talk about next. I'm going to give you.
Let's do the secret tax deduction or the new.
Okay, yeah, let's do the secret. Well, I'm going to save it for the last. Let me tell you one other one, right. Michael. You're going to love this. I'm not kidding. You're going to pass out. When COVID relief first came out, anybody that had an SBA loan, what'd they do, Michael? What'd they do for 6 months? Do you remember?
Wait, again, if they what?
When the COVID relief came out last March, and they passed the bill, what did they do with anybody that had an SBA loan for 6 months? What'd they do?
Oh, dude, that was the best. Are you kidding? I've got that. So basically, because we had an SBA loan on our building, the SBA paid the mortgage on our building for 6 months.
Not deferred it. Not pushed it to the end. They literally paid his bill.
Yes, paid it for 6 months. I couldn't even believe it. It was.
Guess what?
Oh, what? Tell me. Okay, now I'm dying to know.
They're doing it again.
So I can do it on my building again?
Your SBA payment's not going to be due next month, baby.
Wait a minute. I was literally this close to refinancing that building. So what you're saying is don't refinance it, keep it in the SBA loan and let them pay another 6 months?
It's either 3 or 6. I
freaking love you, Mark Kohler. Where's my dude? Oh my gosh, COVID could be, the COVID full speed ahead. I want a hug, man.
Is that crazy or what? So for any of you out there, now I've got two rental properties with an SBA loan. Those are the 504s. Some of you may have an SBA loan out there. They're going to pay your bill again for you. Let me see if I can figure out.
You're lucky we're not in the same room right now. That's all I got to say. I'd be giving you a big old hug, man. That is unbelievable. That's so much money.
Yep. It is just crazy.
Here's the thing, guys. If you're not in a strong cash position right now, There's two things you need to do. You need to listen to me and be coaching with Club Wealth and listen to what I'm telling you. And you need to be listening to Mark Kohler and do what he's telling you. Because if you're listening to both of us, you should be in a really strong cash position in your world right now. Not just because of these tax benefits, because we need to get your business cranking. And then we need to make sure that you're getting all this relief package stuff. We're getting the free money on the mortgage, all this. This is great stuff. Holy cow.
I'll confirm how many months. I know with my amazing partner, Matt Sorensen, I'm just going to text him while we're here on this call. Hey, can you confirm how long the SBA is paying loans again this round? Question mark. Is it 3 months or 6 months? Question mark.
I'm
okay. I'll let you guys know.
That's
okay.
Great.
Now here, okay, everybody, don't go anyway. Here's the last tip of the day. And this helps all of you. And it is freaking awesome. Because the restaurant industry was decimated. It's been very, very hard, right? How many businesses have we seen go under that were restaurants or little bakeries or cafes? So Congress said, what's the best way we can get people going back to restaurants and spending money there and help get, it's kind of like bonus depreciation. We want to give someone a write-off to stimulate the economy. So now for the next 2 years, all dining is 100% write-off in your business.
What?
Not 50% anymore. It's 100%.
No matter who, wait, hold on. Now, I'm assuming that's business related dining though, right?
Yeah. So whenever you buy food in your business, the restaurant bill is not cut in half. Bar tab, tips, the whole thing is now 100% write-off for the next 2 years. This has never been in the last 40 years of tax code. They always cut it in half. Always cut it in half.
So cynical me has to say, is that going to be enough to help out the restaurants? But I got to tell you, that's
going to help me out.
It definitely helps us out as business owners. Yeah, you're definitely right about that.
Okay, now here's some things that we're still waiting to see. First of all, restaurants, take out or dine in. See, and so now, under the Tax Cuts and Jobs Act, they cut taking out to your office is 50%. The donuts in the office were 50%. All that came down, Michael, remember 2 years ago, I wasn't too happy about it, and they killed entertainment. Well, they're giving us dining back at 100%. So when you travel to go do your board meeting, or you're traveling or driving around with customers or whatever, and you pull through the drive-through of Wendy's, 100% write-off.
Even if they're not with you?
Well, if I'm traveling for business, so let's say I live in Seattle, but I'm traveling to Federal Way, or I'm going out to Tacoma, and I normally don't go there. When I eat along the way, 100% write-off because I'm traveling for business.
No way. So those of you that are coming to Mastermind in Paradise here in February, and by the way, Mark, I need to talk to you about that. But Mastermind in Paradise is coming up, you guys. Your travel, all the food that you're eating the entire time you're there, the entire time on the way.
Entire time.
100% write-off. I love Oscar Montalvo's got the best comment of the day. Steaks for everyone. Let's go.
Now, here's where I get a little, where the questions come. Because think about this. I go by the grocery store and buy donuts for the office. Mm-hmm. Is a grocery store a restaurant? No. So it's restaurant dining. Now, what if I go to a bakery and pick up donuts and they do sandwiches at lunch? I'd count that. So the grocery store thing's going to be a problem. But I think if I go to the deli at the grocery store, I should be able to write that off because I think it's going to come down to prepared food. So whether it's catering or a deli in a grocery store or a bakery with donuts, we're going to get more direction on this. But certainly your bread and butter restaurant, 100% write-off for all business owners. And realtors spend a lot on food, right? You're always whining and dining. If I don't have a realtor spend 8 to 10 grand on food, there's something's weird, right? So right. 10 grand in food used to be only a $5,000 write-off. So now you're getting 5 grand. Now, if you're in a 30% bracket, Fed and state, you just save $2,500 in tax, 2 grand in tax. Yeah. Done right there.
Dude, that's huge. Okay, so that's massive. All right, so Coach Sarah Mulford Martin asks, is this food write-off for 2020 or just 2021?
2020 and 2021.
So it's retro through 2020.
Yeah, or carried forward, not retro. But yeah, 2020 and sorry. So sorry, Becca. Oh my gosh. I am so sorry, everybody. Getting my years mixed up. It's 2021 and 2022. It's
Okay.
2 years, but it starts right now. It's already in effect. It's already in effect. January 1st.
January 1st.
Yep. Yep.
Okay. So
I am so sorry, everybody. It's not 2020. It is 2021 and 2022. Oh my gosh.
Still though, what a
yeah. So the next 2 years, your dining's a write-off. So
yeah, that's huge. That's a very big deal. I see a lot more food happening in the entertainment. Well, you know, and here's another interesting thing for our never mind. There's a lot of things you can do with that.
Yeah. Right. Now, on this note, everybody, let me say, in your books, here's some practical things to take note of. When you go buy food for an open house, put that on event food. So if you're holding a workshop, you're doing an open house, you're doing something for your customers, that's always 100%. Make sure that even if you go to the grocery store and get some cheese and crackers and wine for an open house, that's 100%. Then you've got your dining that's used to be 50, that's now 100%. And so you want to make sure that those separated, because if you get audited on one, you want to go, oh, you can't touch that. That's 100%. That was my open houses and workshops and blah, blah, blah. I don't know if the coffee maker in the office is going to still be 50%, because you didn't buy it from a grocery store. It's in the office. That's typically 50%. So we'll get you more info. And that's why I want you listening to the podcast every week, the newsletter every week, because we'll keep you up to date.
This is awesome. So guys, go to clubwealth.com/CPA. You can connect up with Mark Kohler there. Clubwealth.com/CPA. Let me tell you, man, you guys need to be watching this. If you didn't get a chance to watch this from the beginning, go back to the beginning of this video. You need to watch the video. And I'm going to give you just a quick summary. So on the couple of the tips we got here today. So for PPP, second round of PPP, you look at 2020, you need to find, in order to qualify for that PPP portion of it, you've got to find your worst quarter in 2020 and compare that to that same quarter in 2019. If 2020's worst quarter compared to the previous quarter, or compared to that same quarter in 2019 was 25% lower than it was in 2019 in terms of gross revenue, then you qualify for the PPP. If it is only 20%, and actually let me back up, you qualify for PPP and for ERTC. Now, if it is only 20%, you still qualify for ERTC, but not PPP. Now, if you never took PPP in the year in 2020, then you actually get to now qualify for PPP under the I'm a little concerned about what might be going on. I'm unsure. That's the uncertainty rule. And you don't even have to use this 20 or 25% standard for either of those. So that's huge. Next, we talked about the vaccine. And by the way, it's a hoax. It is, you do not the vaccine itself, but you do not have to have the vaccine to qualify for this. They're not forcing you to get vaccinated in order to get this money. Also,
one-page app for forgiveness.
One-page app for forgiveness. If you did take PPP, it's a one-page application to get that forgiven if you took it in 2020. And then the two tax tips that we just got. Number one is that the restaurants now are 100% write-off instead of a 50% write-off like they usually were. Not all food and entertainment, just restaurant dining qualifies for this. So you can't go grocery shopping and count that. And the other one, I totally forgot the last
SBA.
tax. Oh, SBA. Yes. How could I forget? I did almost pass out on that one. So the SBA is if you have an SBA loan on a building or any kind of an SBA loan for that matter, if I remember right, is that right, Mark? It's all SBA loans?
Yep. Well, the 504.
So the SBA 504, so literally they will make your payment for 6 months. We had that happen already. We're actually in our final of those 6 months that we took that free money from those guys to make our mortgage payment on our commercial building. And this year they're also, did we find out the number? Is it 3 or 6 months? The SBA
6 months.
6 months.
It's another 6 months. That is
on the SBA.gov. Here it is. As part of our coronavirus debt relief, SBA will make your principal and interest payment and any associated fees with all current 7A, 504, or microloans in regular servicing status as of September 27th, 2020. So if you had a loan before September 27th, 2020, you're in business.
this close to refinancing that loan into long-term financing.
Yeah.
I'm so glad I didn't. That is, I mean, that's six figures to us. I'm not even kidding you. That's a six-figure benefit. I'm floored. That's actually it's almost exactly $120,000 to my business. So guys, I don't know what it is for you, but it's big. Like, get that money. That's huge.
And this is, everybody, I want to give you kudos. Not every realtor takes time to study these details. Sometimes it's easier to save money than make money.
Oh,
Right now. And so I want to tell all of you, I'm so proud of you for listening. Very important.
I think it was Benjamin Franklin that said that the fastest way to make money, or the best way to make money, is the avoidance of tax, not evasion, but the avoidance of tax. Mm-hmm. And this PPP money and ERTC money, it's the same thing. It's free money, and you guys are crazy if you're not going to get it. If you have any questions, go to clubwealth.com/CPA. Connect up with Mark's firm. And Mark, what is a one-time consult? You guys do a full-blown consultation. It's actually pretty cool deal. What's that run?
Well, you can book a half hour or an hour. You don't have to become a long-term client. Just book a half hour, an hour. I'm sorry, this is attorney fees rates, but we're trying to keep it Main Street. These are real tax attorneys, so it always sounds like a little much, but $200 for a half hour, $400 for an hour. Ask about questions for your future tax planning for the year. Come with a list of questions. I've got 6 tax attorneys. If you book an hour, we're going to build a diagram. We want to ask, how's your S corp structured? Are you paying your spouse? Are you paying your kids? What are you doing with your auto loan or auto deduction this year? Are you, we've got 20 different strategies we love to talk about. This is just one. So bring your tax return, get it reviewed. Let's talk about it. It's money well spent. It really is.
Well, and I agree. And I want to share this with everybody that's watching, you guys. When we first started working with Mark, and my first year that I used Mark and his firm to handle our taxes, we doubled our income that year, and we paid the same amount in taxes. Go figure, right? Like, Mark figured out how to essentially cut our taxes in half. Now, also, when we started referring Mark to our clients, we sent so many people to him so fast. I'm going to call it what it is. We overwhelmed him, right? Yeah. And let's call a spade a spade. Yep. There was some frustration because the customer service wasn't able to keep up with the rate at which our clients were trying to get in there and get to know you guys. So that being said, I have since been hearing feedback from all of our clients that I've heard feedback from on Mark has been consistently, oh my gosh, I don't know what they did, but they figured that out. They've got the communication working better now. It's awesome. And they saved me a ton of freaking money. So
thanks for saying that. And people, if you do have a little bump in the road, like I said at the beginning, let Michael know, let me know. We're going to figure it out. We're not like a typical law firm that's just going to bill with impunity and spit you out to the road. We want you to be around for a long, long time, and we want you to succeed. Main Street business is where it's at.
I agree 100%. It's important, you guys, that you let them know you're with Club Wealth. You got to let them know that you're with Club Wealth. It's helpful for Mark to know, because it just make sure, and by the way, I don't get paid for this. I'm not getting paid to refer you guys to him. I'm just telling you, right, Mark's the real deal, and we want you to save money. So,
and we're, I'm not here today getting paid either by Michael to be here. I want to give back to the community, and Michael's been helpful to my daughter, who's a new realtor, and giving her advice. And she's with a good team right now. Michael, it's going well.
I'm glad to hear that.
Yeah. And so I'm a firm believer in the realtor organization, the National Association of Realtors. I've been trying to get to their conference every year, but they want me to come for free and speak for 40 minutes. I'm like, nah. People, they start freaking out if I have to get off stage, and they don't get it. But anyway, last point, here's what I'm saving my taxes for. Here's my little Tesla truck.
Nice.
So
does it have a broken window? I'm just curious. I'm sorry.
He's fixing that. I'm driving a car right now with 160,000 miles on it because I'm the millionaire next door. I don't live extravagantly. I want to be conservative with my money, but I am saving up for my little Tesla truck. I'm in line. And with COVID, it got bumped another 6 months. So it'll be probably 2022. But yeah, everybody save your money. Don't live extravagantly. Start your Roth IRA. Start looking for a rental property. It's going to be a buyer's market this year. Lots of good things out there.
Back up. We got to talk about IRAs real quick. Since, let's just take a minute to do that real quick. So what if, hey, Mark, what if I didn't fund my Roth IRA before the end of the year?
Do you have a traditional IRA or just just a 401k and no IRAs at all? Or do you, okay, the question depends on, do you have an IRA traditional and a Roth, or just a Roth and you didn't fund it yet?
Okay, I don't know.
Okay, all right. For any of you out there, now here's what I recommend for, this is where my high-end, not high-end, but my successful realtors go. What we do, and everybody, you've seen my left side, right side. I want your S Corp over here, kicking out your W-2. We're saving on all your draws, no self-employment tax. We're writing off your health insurance right out of your S Corp. We're writing off auto, dining, all the goodies. If you have children over age 18, we're 1099ing your children and helping them with whatever we're going to help them with. Our kids under age 18, we have a little family management company, and this is where I pay kids under age 18. These are kids over age 18. I might even put my spouse on payroll. But the reason why I would do that, my wife, Jennifer, is because you're going to fund a 401k. And so this is called a solo 401k. We have a $500 DIY setup and a $999 within an hour within a tax attorney. But the 401k can buy real estate, and it can buy cryptocurrency. It can do stocks, bonds, and mutual funds. You control the checkbook. You control it, not a stockbroker. Mm-hmm. But on the side, my successful realtors do two more things. One, they're looking at rental properties. This is going to be a buyer's market this year. We know that there's a pile up of foreclosures waiting to happen. Evictions are going to hopefully be turned loose. Property owners are dying with bad tenants. You're going to see some deals out there. Don't always list it on the MLS. Pick one up once in a while. Buy a rental and get a little cash flow going. So you're going to have your own LLC over here. And then Michael brings up the Roth IRA. I want a Roth for myself, for my spouse, if I'm married, for my children. We have 8 Roths in our family. Every one of the kids, and 2 of my kids are married now. So we have 8 Roths. We've then formed an LLC that's owned by 8 Roths. And as a family, we have a board of directors meeting on a regular basis and talk about how we're going to invest our money. And we're going to get a far better rate of return than a mutual fund or an ETF. So Michael says, if I didn't fund my Roth by December 31st, am I screwed? No, you have until April 15th. Also, under the new Secure Act, we can set up a 401k now and get a write-off for 2020. That's a new law that's never happened before. And I can, crazy. And it's 25% of whatever your W-2 was, I can put in a 401k for 2020. So you want to be funding both of these buckets, the 401k, the Roths, your rentals, and then your home is over here and your trust owns everything and a river runs through it. So this is kind of my trifecta.
Exactly how you've got me set up, right? I mean,
yeah, this is you. This is you. And what's great is with Michael, and his kids are there at all the workshops helping out. And so when he pays his kids, he does not even have to issue a W-2 until they turn 18. And his kids have Roth IRAs as well. So I can buy Bitcoin that's off the chart. I don't know if right now is the time to buy it. It would have been 6 months ago. But you can buy any of those things in your Roth. You control your retirement account, not the stockbroker. So anyway, so.
Hey, I've got a quick question for you though. So yep. Can I use my Roth to buy real estate?
Oh, yes. Yeah.
So I can buy rental properties with that Roth so if I can buy them through my family's LLC, if the families can all contribute to that same LLC, like you've got us diagrammed out, we can take that money, we can go buy real estate, and we both get the protection of the LLC as well as we get the tax advantages of the Roth.
Yep. And this is kind of the trifecta that I teach a lot. Is down here is your trust, your revocable living trust for privacy. I don't want your last name in it. I want probably an address of not your private residence. We want to try to use to stay away from identity theft and fraud. We want to be very private. S Corp, LLC for rentals, and then the Roth with another LLC, and you can buy rentals. I have actually even a health savings account that owns an LLC that's got the cutest little meth lab, and it just cash flows wonderfully. So
that's why it's a health savings account.
And that's true. It's true. I have an HSA that owns an LLC in Illinois. Anyway, these are the things that we'll talk about maybe in February at your big conference or whenever I come out on a regular basis. Love it.
And Mark, one last question for you that just I think would help some of the people that are watching when it comes to the family living trust.
Mhm.
What is the purpose for that? Is that an estate planning strategy? Is that so that if it's in anything that's owned by the family trust now can convey to my kids without having to pay estate tax? Does that work that way, or am I dreaming?
Well, it's very interesting you make that point. Oh my word.
It's a big deal,
Okay,
right?
the first, this is my new calendar that comes out next week, the Mark J. Kohler 2021 calendar. It's got tables of all the rules for different states, tax dollar amounts for deductions, all the deadlines by month, where I'm speaking, webinars, podcasts.
Okay, that's cool.
Yeah, it's fun. So in it, I've got a table that shows all the states that have a state tax and the states where your children have to file a tax return, even if they don't have to do a tax return for the feds. You don't have to worry about that, Michael, because you're in Washington State where there's no state tax. Right. But let's just say some of you, give me one of your coaches, where are maybe the most...
They have a state tax in Oregon, don't they?
Oregon. Okay, so you've got coaches in Oregon.
Yeah.
Okay. Yeah. The standard deduction in Oregon is $2,315. Mm-hmm. That's it. The federal is $12,550 this year. So remember, Michael, I would say maybe pay your kids $6 or $8 grand for helping in the business. Do I owe a federal return? No, they had earned income less their standard deduction of $12,550, even though I claim them as a dependent. Oh, but in Oregon, their standard deduction is only $2,315. Mm-hmm. That means my kid has to file a tax return in Oregon
on their $4,000.
That's right. And a lot of people don't know that. So this table helps out. But on this note, the trust is for estate planning. In Washington State, there is an estate tax. That's
huge
brutal.
Too. Yeah, it's brutal in Washington. So do we avoid that with the trust?
You can avoid a lot of it with what's called an AB trust. But the number one thing for all of you with the trust, to answer Michael's questions, it deals with your estate. The number one thing is we want to avoid probate. So we don't ever have to go to court when someone dies. It's private. It's not public record like Robin Williams, who regrettably committed suicide. He only had a will. It's been everything exposed to the public and everything going on. The nice thing is you can put in rules for your beneficiaries. So even if you have kids that are 25, 30, 35, but giving them money would not be healthy for them, you can spit it out over time. They get a third this time. They have to earn money to get money. If they're still married to that loser, they get nothing. I mean, you can put whatever provision you want in there. And
I like that one.
Yeah, you can say who's going to be the guardians of my kids under age 18. Mm-hmm. I like the privacy. That's the number one reason why clients really are doing it more and more. Probate rules. Who's going to handle the money? That's the trustees. We do trust for pets. There's over 1 million pets euthanized a year now from people that die with pets and no one wants them.
Oh my God.
They end up at the pound. Because 1 in 3 Americans have a dog. That's the average. Isn't that amazing? 1 in 3 Americans. There's over 400 million people in America. That's a lot of dogs.
That's a lot of dog chow. I'm in the wrong business.
Yeah, and people when they die, grandma dies and no one wants Fido. And so you can put in your estate plan money for someone that takes the dog and provisions for your pets. A lot of people, their pets are their most valuable asset. Mm-hmm. So guns, another big one. We can transfer guns without having federal registration laws. We have gun trusts. We set up gun trusts.
So hold on. So literally you can avoid the FFL registration requirement by putting it in a trust and having that convey with the trust to your kids?
Yeah, now I'm going to make someone mad that's not a gun fan. I'm sorry, but you can get a silencer and a suppressor a lot faster with a trust than an individual. Yeah. So we set up a trust just for your guns. And what's cool is the trust owns all your guns and that's what's licensed. When you die, we just change the beneficiary. Licensing doesn't change. So that's very helpful for people with weapons. Anyway, but that's estate planning. Gosh, I just love talking to you, Michael. Sorry, I'm talking too much.
I'm loving all this. This is great stuff. Mark, we need to wrap it up. I know you need to go. Okay. And then you and I have a quick meeting after this because guess what? Mark's my tax attorney and he's going to take care of some stuff on my stuff. So I'm excited about that. You guys do me a favor. If you enjoyed what you saw here, if you got something out of it, you found value at all, do me a favor. Do me 2 favors. Number 1, tag some people that you know in it that could get value out of it. Or type in the comments that, hey, thank you, Mark, got value out of it. Something, say something so that we know you enjoyed it and you got value out of it. And then hit the share button. Share this with somebody so that they can watch it. You guys, this is money that we want to make sure all our friends and people we care about are getting their hands on. And I see, look at that. Thank you guys. Yes, I'm seeing lots of people typing in the comments now. Thank you for that.
Thanks, everybody. And
Mark,
Michael, I'm going to send you the SBA page on the SBA loan.
Oh, good.
And you could post that in your social media.
I would absolutely do that. Yeah. So if you guys want to make sure you got the scoop on that SBA loan, such a big deal, dude. I mean, literally just on this call, even if we don't, because I know Club Wealth had its best year yet last year, and I'm not sure if we had a quarter that was down last year, but so even if we don't qualify for some of the PPP and ERTC money, Mark, you saved us, easily $60,000 just on this one call, just in the SBA loan stuff. So great stuff, man. I appreciate it. And then you guys, again, clubwealth.com/CPA. And if somebody could type that in on the my personal page there, if somebody could type that in to the comments, clubwealth.com/CPA, that'll get you to Mark.
Okay. Now, Michael, can I give some final deadlines that everybody should be aware of this month?
Please, yeah.
Number one, all of you that are S Corp owners, you've got to file your 941s and your W-2, even if it's to yourself. You've got to have it done by the end of the month. If you haven't processed payroll for yourself for last year, get a service. Go to Gusto, go to Costco, go somewhere. We can't take any more payroll clients. We've got 2.5, 3 weeks left and we're slammed. But you
Tara,
can sign up.
Real quick, Tara, can you type in who we use? I know she's watching right now. I think it's Paychex.
Yeah, Paychex good, ADP, anything like that. But folks, just do the bare minimum with your payroll this month to get last year taken care of. And then you can come on board with my payroll team, Nanette Prisby. She's amazing. She's got a 4-person team. We do payroll in like 15 states. Very affordable. We can help you out this year moving forward. Number two, do not forget, at the end of January, you also have to issue your 1099s to any people you paid more than $600. You would want to start sending W-9s to all these people because you need their address and their EIN or their social. So get a W-9, just go to Google, type in W-9 form, email it to all the people that you've given $600 to last year and say, I need that info. And then you've got to issue the 1099s by the end of the month. Now, you cannot just go fill them out by hand. These are printable forms that you can pick up at Staples or Office Max or the post office. Typically, it's best if you use a service. Again, ADP, Paycheck, we're taking clients for 1099s. So if you need help getting 1099s out, you can go to our office and just call us, and you've got all the contact info there down below. But get your 1099s.
If you didn't do that, there's several things that you got to be concerned about. It's the $100 per day fine. Yeah. If you don't get them done, right? And that's a very big deal. And is that $100 per day per person or per 1099?
Yeah, let me pull it up. I have it right here.
It's a big penalty.
Yeah, the penalty is, my client had 17. The penalties are going to vary from $30 to $100 per form. And if the business intentionally disregards it is subject to a minimum penalty of $250 per statement. So I have to apologize. That's not per day. That's per form. So it's $100 up to $100 per form with an additional $250 per form. There's some exceptions, but you don't know if you should or shouldn't until you get a W-9 from people. So all of you business owners out there, all of you realtors, your business owner, W-2s by the end of the month to yourself, if you have an S Corp, 1099s to all your vendors by the end of the month. Also, if you need to make a deposit for fourth quarter taxes, you have until January 15th next week to avoid any penalties or interest on not making deposits. Talk to your CPA, get an estimate.
Hold on, this is a big one. Hold on. So if you have quarterlies that you did not pay for last year, then you need to get that paid by January 15th, or you could be penalized.
That's right. Now, Michael, you have an S Corp.
Yep.
So you do W-2s. You include your deposit for federal tax with your 941. You don't, once you're an S Corp, you don't do quarterlies, right? You just do payroll. And then you include what you want for
in that.
federal tax.
Yeah, which means
with
we're
your-
always up to date, which is super.
right.
Important. And can I just tell you guys, look, for you real estate agents watching right now and business owners in general, I'll just say really anybody that gets paid commissions, listen, you guys, every single paycheck, if you're a solo agent or whatever, you need every single paycheck, you need to send your money to the IRS from that check. Do not stick it in an account and think that you're going to pay it later or pay it, when you file your taxes or anything like that. You need to freaking pay that money every paycheck. I cannot begin to tell you how often I see agents get in trouble with taxes because they want to earn the interest on the money they're going to pay to the IRS. It's not worth it. It's too big a risk, you guys. Mark, would you agree with that?
Oh, absolutely. A lot of business owners, their biggest threat to their business is the IRS. And it's sad because then they go, ooh, the IRS is bad. No, you didn't pay your fair share. Now I'm going to get your fair share down as low as I can, but got to pay something, people.
Yep.
You know?
I agree. I love it. All right, Mark.
All right.
Thank you, guys. Go to clubwealth.com/CPA. That takes you right to Mark Kohler, and get signed up for his newsletter. Whatever you do, make sure you get his newsletter. And if you haven't already checked out Club Wealth, go to clubwealth.com, check us out, and join our Facebook group, facebook.com/groups/Club Wealth.